Hello and welcome to the recording of a check sale. This document by classification and filing should be found on the income and receipts file. Let's quickly identify the vital information for recording on this document. Number one, this is a receipt. It's not an invoice since the payment was received instantly. Number two, the payment was received by check. Number three, the amount received was 6,480. Number four, the date of the transaction was 12th November. Number five was a check, the narration, check sales. And number six, it should be a standard VAT transaction if there is no alternative VAT information provided. So the next thing now is to identify the form for recording the check sale. Click the Accounting tab, click the Income category of forms and click Income Receipt. Now when this form comes up, drag it to the left, create some space. First and foremost, the VAT rate. It's standard. So click the drop down to select 20%. When the 20% is selected, we get more rows for recording the VAT amounts. Most crucial at this stage is to identify the account to be debited, and that should be the account which received the money, and that is the check receipts account. Click the drop down and check receipts account is selected. Next, click tab to identify the income account to be credited with the net amount. That should be the sales account, and by default it's already selected since it's the first account in the chart of accounts. Click tab to get to the amounts box. The amount to be debited to the check receipts account is the gross amount of 6,440. So we type in 6,480. As that is typed in, the net sales figure is generated and the VAT amount is also generated at 1080, and they are indicated as negative amounts because they are going to be credited to these accounts below. Tab to get to the narrations box, and it should be check sales. Type in check sales, and as we click tab, the narration is duplicated on the rows below. The source document number is 5, so we type 5 and click tab, and we observe a duplication in the boxes below. Now the date of the transaction was 12th November, so we type 12/11/15. When we tab, the date is duplicated below, and now we are in the month column. For this particular business, first month was November, so we type a 01 and click tab. As the 01 is typed in, the first quarter is auto-generated for us. By the look of things, all the information is complete unless we want to modify the narrations on the rows below. But as of now, I'm satisfied and I'll click insert. A confirmation comes up that data has been pasted onto the double entry sheet. So when OK is clicked, the form disappears and we have our information on the sheet. So we've got the date in there, the month in there, the quarter, we have got the narration, we have got the source document, transaction number, which is actually auto-generated. We've got the amounts, the accounts to be affected. We indicate which accounts are in the general ledger and the notes to be generated. The 6480 is a positive because it's debited to account 210. 5400 is a negative since it's credited to sales account. The 1080 is a negative since it's credited to the sales VAT account. Now, this is a duplication of the net amount, which is required for generating the net sales figure for the VAT return. Now, you find that the sales VAT amount appears both in the VAT ledger and general ledger. Now, let's have a look at the posting of this information. Before we do that, we've got to update. Control-Alt F twice. So Control-Alt F5 once and Control-Alt F5 second time. Now we can check. So move to periodic reports. We start with the general ledger. This one credited to the sales account, that one debited to check receipts, that one credited to the sales VAT account. Double entry is complete since the grand total is 0. Let's have a quick look at the trial balance. Trial balance, this is what it displays, and it confirms that double entry is complete since there is a difference of 0. And then we may have a look at VAT computations. This is supposed to be the VAT ledger, where values that end up on the VAT return are generated. And then what else? Let's have a look at the profit and loss count. For the first quarter, the net sales is already there, and that is all. Since there are no expenses, net sales is net profit. Have a quick look at the balance sheet for first quarter. Now the balance sheet for first quarter. We find that bank balance, yes, 6,480 that was received by check. And then 1080 that is owed for VAT. And then we have a net of the two, which is 5,400. That is equivalent to the net profit generated from that transaction, since there are no expenses. These reports should be the same as what is generated by the year end. Let's have a look at the profit and loss account for the year end. That's what it should look like. And let's have a quick look at balance sheet. Balance sheet should be in there. Balance sheet. The net business assets 5,400. Closing capital is 5,400, and the difference is 0 in green. And that is it from that transaction. We go back to our double entry page and scroll down to where the transaction was pasted. Thank you so much for listening, and see you on the recording of the next topic.